Humanity is moving towards renewable sources of energy. As the years pass, the world becomes warmer, fossil fuels deplete, and the sea levels continue to rise. People have been choosing electric over fuel now more than ever. Our generation sits right in the middle of an automobile revolution, the likes of which rocked the world back in 1913 when Henry Ford started the Ford Motor Vehicles production line. However, the big difference a century later is that the internal combustion engine is not as exciting as it used to be. Now it's the era of electric vehicles. Well, who wouldn't want a well-designed, equally priced automobile which does not emit tons of smoke and leaves behind a minimal carbon footprint? The latest player to enter this ever-competitive EV market is a new EV car manufacturer, Rivian. And to say the least, things have proven to be quite surprising. Rivian Incorporation got valued at roughly $127 billion at NASDAQ, but the only problem, this was before they had even sold one car. You heard it right, and you have every right to be confused as to how this happened. But worry not, we are going to tell you how exactly Rivian managed to reach as high as the $100 billion mark with no revenue on paper. Together, we will understand and analyze the factors that propelled this all-terrain electric vehicle automobile tycoon into the $100 billion club so quickly. Welcome to Wealthy Mindset, where we explore unique and breathtaking angles from the world of money, economics, personal finance, and investing. But before we get started, do not forget to like and subscribe to the channel to never miss another video. Rivian Automotive Incorporation is largely involved in the designing and manufacturing of electric vehicles and accessories, and provides the subsequent related services. Entering the market with the launch of R1T and R1S, both pickup truck and SUV, its stocks made its debut on the market through an IPO on November 10, 2021. The company sold not less than 152 million shares at a price of $78, financing the company to the tune of $66.5 billion. Only 3 trading days later, and guess what? The company already has an evaluation of a whopping $127.3 billion. The revenue? Zero. No commercial sales yet. How did it even happen? Let's look at the answers one by one. Firstly, the growing craze about electric vehicles and its increasing demand as governments continue to switch to cleaner forms of energy owing to their zero carbon emission commitment has brought in more investors than ever. Rivian has already crossed the market cap of Ford Motor Corporation, which is one of its major financial backers. Its initial public offering raised an amount of $12 billion, which makes it the largest IPO in the last 8 years in the United States. The stocks skyrocketed within 3 days. If anything at all, this signifies the unparalleled excitement in investors in the electric vehicle market, particularly supporting EV companies that are competing with traditional automakers such as Ford, Chevrolet, and Mercedes. The market was revolutionized by the introduction of Tesla back in 2003, which brought in the vision of futuristic electric cars to life. And it worked. Today it stands at a market capital of $1,038 billion. We suspect that many retail investors might have been licking their wounds by missing out on the meteoric returns of Tesla stock, and they wouldn't miss out on another lucrative opportunity. The entry of Rivian in the EV economy came with the tag of Next Tesla, and the investor enthusiasm that propelled the former has resulted in financing the newbie stock quite heavily. Secondly, it's not only about EV enthusiasm, since there are a number of such companies floating in the market with much lower market cap. So what did Rivian do right? Well, for starters, unlike Tesla and other EV manufacturers, Rivian provides for a wide variety of vehicles, including all-terrain vehicles, including the most famous pickups, trucks, and crossover segments of automobiles, with plans for electric delivery vans too. 20% of the entire US automobile market constitutes pickups, and these highly demanded forms of automobiles are slowly transitioning from internal combustion to EVs. The R1T pickup boasts of a range of 400 miles, and at a cost of $67,500, it comes with some breathtaking facilities, including an inbuilt tent, a kitchen sink, and other well-equipped facilities for camping and outdoor travel. While all the rivals of Rivian are also planning to launch such pickup EVs, including Tesla's Cybertruck with a range of 500 miles and Ford's 300 miles, the R1T is set to hit the roads before them. And this first-mover advantage is surely going to attract early birds, especially since Rivian sells directly to customers. The potential to capture the electric market is thus huge, and everyone wants to harness it, resulting in such a crazy valuation. Thirdly, investors have also been stabilized with a sense of security and confidence as Rivian continues to be backed by Amazon, with its past investments of over $10 billion with an ownership stake of 20%. Over that, Amazon has also placed a multi-year pre-production order for 100,000 electric delivery vans. That is sure to have left quite an impression in the minds of the investors, projecting a stable, near-future market for Rivian. Furthermore, the production capacity of Rivian has startled even Tesla, as high as 150,000 units annuals, with a plan to roll out 25,000 vans per year by 2025. There is a very high chance that it will be as successful, even more, than Tesla. While there might be no real evidence that it will overtake Tesla in the near future, Tesla did not cross the $100 billion mark until 2020, when it had already produced more than 500,000 EVs. While it might be too early to predict if Rivian's lofty stocks are going to come crashing down or skyrocket further, the good news is that it has plenty of potential at an expected annual growth rate of 23% through 2026. So, what are your thoughts about Rivian's mind-boggling IPO numbers and its trajectory in the Nasdaq market? Do you think this valuation is crazy? Or maybe investing in the future of automobiles is not cheap? What do you think? Let us know in the comments section below. Subscribe and hit that bell icon below to never miss another Wealthy Mindset video, especially if you're interested in unexplored topics and interesting stories just like this one. We hope you have enjoyed the video, and we'll see you next time.